Welcome to everyone to our season 2024 for our transfer pricing webinar. So we're very excited to be back after, I think it was 3 or 4 months of a break. And we are ready to tackle 2024 and a lot of movement in transfer pricing. So today we will be covering insights into transfer pricing best practices. And I want to start, before we give an introduction for those who are new, giving some insight on how we thought about this topic was relevant. So some of the things that we get asked by our clients is a lot about, first, education, concepts of transfer pricing that are generally misunderstood or unknown or missed out. The second thing is the importance of good governance. So why is it important to have good governance in transfer pricing? The second point is good governance equal to compliance? That's one of very common question that we get from our clients as well. And one last question to give food for thought for this session today is there such a thing as an honest mistake in transfer pricing? So if I don't have good governance and I do make mistakes, is there such a thing as an honest mistake, and would it come at a cost to the company, or is just, oops, honest mistake? So hopefully today in this session, we're able to answer these questions from our team today. So before we go into the topic, I'm just going to give a brief introduction. I have seen that there is a lot of newcomers this time around, which is good to have a new crowd. So for those of you who are new, give me 2 minutes to give a brief introduction before we delve into the topic. So our firm is Transfer Pricing Solutions. We obviously specialize in advising multinational companies in the area of transfer pricing, which is a niche area of international tax. So we also cover certain topics of international tax as well. We have currently 4 offices, one in Australia, Singapore, Malaysia, and UAE. From these offices, we cater to the Asia Pacific region. Apart from that, we also contribute to certain journals, and we like to do a lot of industry leadership through our webinars, which we conduct internally and also externally. So keep an eye on all our events, because we do a lot on the educational side and industry contribution. So now I'm going to follow to introduce our panel for today. So first of all, we have Hon Chuan Tan, who is the director and technical lead of Malaysia and one of the managers in Australia. He has over 10 years of experience in transfer pricing and indirect tax. He has been playing a key role in developing our practice in Malaysia. Before that, also he developed and was the pioneer of building one of the mid-tier firms practice in Malaysia. So he has assisted clients with transfer pricing planning, risk management, transfer pricing documentation, country by country reporting, tax effective supply chain management in the Asia Pacific region. My name, which is Adriana Calderon, I'm the Director of Transfer Pricing Solutions Asia and Malaysia, co-founder of our offices of Asia and Malaysia, with about 15 years of experience in tax and international tax and transfer pricing over different regions, Asia Pacific, South America, and the US. And I will introduce our third panelist, which is Bin Jin, who is our manager, who started his career in 2010 in one of the big 4 in Malaysia. And he has assisted in 2 of the first 3 unilateral advanced pricing arrangements signed with the Inland Revenue Board of Malaysia, as well as the subsequent annual compliance report for APA sign. So Bin Jin also brings a lot of experience because he has had the privilege to be in consulting and also in industry. So he will have a lot of practical insight for us as well. So with that, let me just start with the agenda for today, where we will be talking about first transfer pricing, operational versus planning versus compliance. Second, we will be giving some country perspective and latest trends. And then we will be talking about audit ready and giving some tips in the context of a case study. So let us start first with transfer pricing, operational versus planning versus compliance. And that comes to my first question that I raised at the beginning of this session, which is, why is it important to have good governance? And is it good governance the same as compliance? So maybe with that, I will let Honchun to start discussing and giving us his insight on operational side of transfer pricing, and hopefully he can answer the main question for us.
Right. Thank you, Adriana. It has been a good break since last year. I think it's a good way to start our year with this topic when we're looking at best practices managing TP in your company. Now, as we all know, transfer pricing just does not come out of nowhere, right? It generally stems from an idea, be it from the management or someone in the business, whereby they're thinking of expanding or restructuring the business, be it domestically or to another jurisdiction, looking at the market share from a different country, for example, right? So that's where operational side of TP kicks in, right? Whereby the management will start having the idea, then they start brainstorming this idea, right, as to how best to expand my business. So from there, you brainstorm the idea, then you start coming up with different approaches as to how am I gonna capture that market share, for example, right? And then commence setting up the control transactions, right? So that's the first step to look at. Hey, am I gonna set up an entity? I'm gonna set up a branch, right? So that's when control transactions comes in, right? So in this phase, the management will be looking at various types of related party transactions. So control transactions, related party transactions, both are interchangeable. That could arise from different approaches, right? So when you look at approaches, then you'll be thinking, okay, for example, what kind of business am I going to set up in another country, for example? Do I have a service type approach whereby I'm looking at, okay, who is the service provider, who is the service recipient, and what type of service am I going to offer, right, between the related parties? And if we were setting up an entity, for example, then are we injecting funds, by way of debt or equity? That's where you look at your debt equity analysis, or you would have different types of approaches and with their respective potential control transactions. So that's when you have an idea, you start thinking about what kind of control transactions I have, what kind of scenarios I have, right? So then you have different types of approaches with their respective control transactions, right? Then now come the next phase whereby we're looking at implementing these control transactions. Now, when you look at implementation, obviously in this phase, bear in mind when we are talking about operational TP, it's all these are still hypothetical, right? It's still in our minds what's the best approach that we should have, right? So the objective is to select the best possible approach. And the next phase, right, you'll be looking at each approaches, and you may have estimated figures to assess the feasibility of each approaches. And obviously in implementation hypothetical phase, there are a lot of factors to be considered, not only TP. Obviously, we were looking at, hey, taxes on the other side, the other country, and customs duty, for example, when you're buying and selling, you would have the counterparties, regulations, licenses, for example. So there are a lot of factors to be considered, so that you need to keep in mind that it's not just TP. Now, when you want to quantify, when you look at how the implementation will look like, then that's where your quantify processes takes place, which is your accounting finance aspect, whereby you'll be looking at plugging in these estimations, then run the numbers for each approach and look at and sort of assess the financial impact for each approach and see the feasibility of each approaches and see which one makes more sense and which one is better than the other, right? And then from there, then you have a sort of a decision to be made between the management to see, hey, okay, we've done this hypothetical analysis. Which approaches are we going to take, or if at all, whether all these approaches make sense or not. You may not fall to one approach. You may actually have to fall back to the drawing board and start again, right? So all these will take place during the brainstorming session. And once I've undergone the impact check, financial impact, feasibility study, and the management have actually selected an approach to be undertaken, that's only then we'll be looking at the TP aspect, right? So when we're looking at the TP aspect of it, it's more obviously in relation to only the related party transaction, bearing other taxes to be considered as well, whereby you would have then, the TP planning started taking place, looking at detailed analysis as to what are the charges, what are the arm's length pricing between the related parties, what other TP analysis or TP issues that we need to face for each country, right? So this TP aspect that will kick in. Obviously, on top of the TP aspects, you'll be looking at the tax aspects where you have your compliance requirements, you have your tax computation. You have to nowadays you have to fill in the related party transactions details. You also will be looking at whether there are any withholding taxes involved. So there are other tax aspects as well. And obviously, lastly, on the legal aspects part, it goes hand in hand with the tax aspects, TP aspects as well, whereby we always emphasize that when you have a TP, then you need to look at it on the legal point of view, especially in terms of contracts, having contracts in place, intercompany agreements in place to formalize all these intercompany transactions to ensure that you actually then satisfy the legal aspect of the overall operational TP point of view, right? So when we look at operational TP, these are sort of the considerations to be made when we look at operational TP. So do you have any other ideas, Adriana, to add on in relation to the operational TP, something that you really like?
Yeah, I think it's a building block, basically. So it's kind of having some blocks of aspects that ones have to consider, because if you just do some theoretical legal framework without finance, for example, then you don't know if the numbers will work in the context of the legal side or in the context of the tax outcome or the transfer pricing outcome. So I think these four building blocks that we have here, which is the finance, the TP, the tax, and the legal, they are the key building block of any implementation, because if you leave one aside, then it's kind of like, if let's say, for example, if you leave the financial aspect on the side and you don't model the numbers on the legal framework, you will end up with potentially not being able to know practically what it means in terms of outcome for the company. If you just don't model financially the outcome, you don't really know whether it's optimal from tax, from TP point of view. So I think to me, I agree with you that these are the four building blocks of any implementation, and they all need to go line in line. That's why TP is not only is an area of international tax, but it's not only about the tax, it's also about accounting, finance, legal, which is why they all need to go and play a role in any operational side. And I think these building blocks are the key to have success in the compliance side, but we will talk about it in the following slides. So then this brings me to a question always, which is, what do you mean by the financial aspect? What do you mean by the financial requirement for implementation?
Yeah, thank you for next slide. So yeah, I think one of the observation I want to add was that the operational TP is lacking from my observation, whereby a lot of taxpayers, a lot of companies, they they just jump straight into the TP aspect of it, and then obviously then looking at the compliance part, that is when you find a lot of issues and challenges when without going through the first few processes, and it may not make sense in terms of looking at the operational TP. Now, the question here is financial modeling required, right? I'm an accountant. I'm sure a lot of accountants will sort of agree. I mean, I like numbers, and this is one of the fun part of having a financial modeling in terms of TP, right? I'm sure you have finance managers out there, accountants out there, not only looking at TP point of view, but also looking at business point of view, right? To us, financial modeling is very important, and it really play a huge role in ensuring that the businesses at least have that success factor in place. Very similar to when you want to invest into something. Well, I'm not sure about Bitcoin, but other than Bitcoin, for example, whereby when you want to invest something, financial modeling will help a lot by looking at your net cash flow, NPV, net present value. So similar things apply, right? So whereby when I'm looking at financial aspect, it's more so to look at what are the impact, the risks, the impact from looking at pre-scenario and post, right? So you have estimations, you have forecast numbers, you plug in the estimation numbers, coming up with your putting into your financial modeling and looking at the final numbers, the bottom line as to whether it makes sense, right? So when you have a pre-post scenario, you have your data in front of you to be able to make informed decision as to whether that approach would actually be cost effective, or would it provide less benefit from a pre-scenario, for example, right? So we always look at strength versus weaknesses, cost versus benefit, right? So when looking at financial modeling, it's a bit more complicated than just normal financial modeling, because it involves both countries if you are going cross-border, whereby you're not just looking into your financial numbers, your operating margin, for example. You're also looking into other regulations, whether it makes sense to actually invest in that particular country, whether there are any grants, any investment opportunities, and any incentives provided by that country, for example, right? There are a lot of factors to be put in place, whereby you come up with your cost, you come up with a benefit, and lastly, look at whether it's feasible to have these in place, right? Are we going to have when you're looking at your supply chain, for example, which country are you going to put in as a procurement entity, for example, right? So then you'll be looking at the tax aspect. You'll be looking at even legal aspects. Legal aspects, not just contracts. You're looking at licenses, regulations, whether they are able to apply for these regulations easily. Certain countries, that you may have pushbacks on having licenses, and there may be strategies to obtain these licenses. It obviously varies country by country. So these are then put in place on a cost versus benefit perspective, and then from there, the management would then decide, hey, does it make sense to actually go through this scenario and then to actually implement it? Because that's where the decision making comes in, whereby are we gonna do this or not, right? So if everything goes well, if the finance aspects of it goes well, and when you look at TP aspect, everything is in line, tax, legal, then that would be a good factor for you to actually then make that informed decision to actually go ahead with your that approach or not.
I think another thing that is worth mentioning here is, I guess, the whole point and why would you need to look at TP planning first as a best practice is because there is not one way to do things in TP. There is actually different ways in which you can set up a transaction and in which you can set up a business model. So if there was only one way, then there is no point in doing TP planning and there is no point in doing finance modeling. But the reason why you kind of need to look into the options available is because there could be different ways in which to set up your uh, transfer pricing implementation and optimize your transfer pricing in general. So, Hongchuan, why don't you give us some key points here when it comes to planning and TP, just focusing on the transfer pricing aspect?
Yeah. In terms of TP, right, even for us, we have been performing a lot of feasibility studies for companies to look at all possible ways, as Adrian has mentioned. In TP, that's just a lot of approaches to be undertaken to ensure that, you know, the obviously the main objective is to have that competitive advantage, to minimize your taxes as a group legally, and to optimize your taxes. I think that'll be a better word. So there are a lot of avenues in place in terms of TP to actually allow the group to enjoy these TP benefits, right? So when we're looking at key best practices, obviously you'll be looking at what's the objective, right, of this approach, and then you have to then start identifying the related party transactions, RPT, to look at what type of transactions are there, what is this, what's the complication within this transaction, and then obviously you perform your scenarios under the various approaches, and to look at first, when we look back operational TP versus actual implementation. Theory part, it may make sense, but there may be circumstances whereby you have all the theory, you have done all the brainstorming, you have done all the finance aspects. Then come the reality, the actual fact of implementation. It may not be in line with the theory, right? So you have to make sure that, you know, all these scenarios are put in place to ensure the alignment of both theory and reality when implementing, right? So that's important. And once, you know, the approach, the model has been selected, then this is where the TP aspects come in place. You have your, obviously, your TP planning, your TP policies with your overall framework for the group. And then with the TP policy, you would have your pricing policy, you would have your detailed analysis to support the arm's length pricing. And obviously you have your compliance piece, and you then have contracts in place to reflect your TP policies, and other documents in board minutes, and correspondences between board minutes. These are equally important to ensure that you have the proper documentation to support the TP, as well as justify going forward what your TP, what your transfer pricing position is for the group as a whole, right? So these are the best practices in mind. And I think the next question generally that we have, Adriana, would be what are the key challenges have we faced when we have chat with multinationals nowadays? what are the key challenges that we have?
Thank you, Honchan. So I think before I go into the key challenges, that last point, which is documenting board minutes, is such an important point and is such a part that is overlooked. No one sometimes look what's the articles of incorporation rule on making decisions on, for example, deploying a loan. And a lot of the times, the articles of incorporation of the company may say that that has to be authorized by the board. And I recall a case specifically where this was missed out on a particular case of a loan, where the tax authority was actually trying to disregard the loan because there was not board authorization. So essentially, there wasn't a transaction and the contract was not valid. Obviously, it's a bit of an extreme case, but what I'm trying to say is like these 4 points is super important to keep in mind. Coming back to your question of what challenges are usually faced by MNCs or multinational companies or companies who are dealing with transfer pricing. I think the first thing is lack of skill and knowledge in transfer pricing. Because again, it's such a skill that requires some accounting, finance, tax, legal, and TP knowledge itself, that people struggle to understand how to go about dealing with a transfer pricing issue. A lot of the times, the type of questions we get is like, well, we want to start setting up our first transaction and we don't even know where to start. So then that's where there is a need to skill up and educate. And then obviously management or board of directors not understanding themselves. Why is it important? And when you go on the angle of compliance only, it becomes a bit of a battle, because for any director of more than one company, that is when there is control ownership, for them is very simple. They are business owners, or the company is only concerned about the fact that it's all the same. Why should I care? So that comes also into the skill and knowledge. I think the other key point is the fact that there is inconsistencies in the approaches among the countries. So I think having in hand someone who understands the region is definitely important, because there is inconsistencies in the different approach. I think the third point is that definitely a lot of the operational aspects of TP or transfer pricing are not regulated. What is highly regulated is the compliance side, but it's a bit contradictory, because even though it's not regulated, is expected from the tax authority. And Honchen will share later in the following slides some of the reasons as to why we say that even though it's not regulated, is expected from the tax authority. There is also the complexity of the fact that because transfer pricing come into place involving, in most of the times, different countries, then you have the complexity around the understanding the local tax and TP regulations as well. And in our region, which is Asia Pacific, we have the language barrier as well. And I say this because obviously I practice in South America, and in South America you issues, but you don't have the language barrier because there is a common language, so it's a little bit easier. But in our region, we have this peculiarity as well. We make things a little bit complex. So and I think overall, I will say, if I was going to categorize these 5 points, what do I think is one of the biggest issues, or two of the biggest issues? One is the fact that operational side is not regulated. So it's very silent, even though it's expected. So it's kind of like you are getting yourself into a secret door that you don't know where to stand. And I think the first one on knowledge is also a big one as well. And knowledge that it can only you can educate, but a lot of the times, for example, for us, it comes from just doing a lot of implementation over and over again, I guess. So maybe with that, we can pass it on to TP planning versus compliance. And now that we have talk about what is operational, then we can talk about planning versus compliance. So maybe with that, I would pass it on to Binjin.
Yep, thanks, Adriana. So one of the most common questions that our clients have asked us was, why am I need to do a planning when I need to do a compliance at the end of the year? So the main concern, like I think one of the things that Adriana has just mentioned previously, is that when a company wanted to have a new transactions, they do not know where and how to start it. So what is the kind of transactions they want to have, what kind of policy they want to do it. So this is where the planning kicks in. Where planning is concerned, the planning should be conducted at the time when a new related party transaction is going to be transacted. So for example, if I'm going to have a sales to my related party in Malaysia from Singapore, then what is the transfer price that this company should consider to be arm's length to reduce the unnecessarily transfer pricing risk? So this is what a planning is. Whereas a compliance is totally different exercise, where compliance is only the exercise will be done when you have your close your books of accounts, and we are testing whether the transfer price that you have done in the past one financial year is at arm's length. So both analysis are almost the same, but the timing of doing it is totally different. One is before the commencement of the new transactions, and another one is after completing the transactions. So both have the same merits when it comes to transfer pricing operationals. It depends, of course, it depends on the materiality of the transactions and depends on the business industries.
How
Yep.
about the compliance and testing part? So how would you define that? If you can give us some insights on what does it entail?
Okay, so for testing and compliance, what usually that expected by the tax authority is that they will expect a detailed transfer pricing documentation that documenting how the companies perform, what industry they are in, how the group is performing, how the groups is interacting with the taxpayer. So this is some of the qualitative documentations that need to be prepared. Nevertheless, a benchmarking analysis, for example, the local taxpayer is doing this much of margin, earning this much of margin, then compared to what the other players in the industry, how is their margin is, how far away your margins compared to this company's margin. So these are the things that are required in the testing and compliance, and it has to be prepared by the lodgement of the tax return in most of the countries. So which means that, for example, in Singapore, you have to lodge your tax return by November. So your TP reports, your testing and compliance has to be completed by the date you are filing your tax return. So this is very important because in the event of a tax dispute transfer pricing audit conducted by the tax authorities, the first thing they will ask is that where is your transfer pricing documentation? I want to see it. I want to know your companies. I want to know your industry, and I want to see how well you performed in your industry when it comes to your net margin earned. So I guess this is the sum of the testing and compliance that all the taxpayers should take note of whenever they are doing their lodgement of tax return.
Thanks, Binjin. So let's talk about the country perspective, where maybe we can talk about Australia, Singapore, and the region, and Malaysia. And I think the question here is, are there any benefits on looking at the operational side and planning side? Is it a must in the particular country, or is compliance good enough? So what is in there for me as a taxpayer to look at the operational side and planning side? And I will start with Australia and Hong Chuan. So what's your view on this?
Yeah, well, in my perspective, it's obviously it's not a must. It's recommended to have both the operational and TP planning in place. Well, in Australia, for example, Australia is more or less considered a more transparent country, whereby in terms of tax, they are well developed. And in Australia, there are a lot of the so-called, we call it, or they term it, practical compliance guidelines provided by the Australian Taxation Office for the taxpayers to be able to self-assess their transfer pricing positions for respective transactions. This in itself allow taxpayers to be able to plan ahead, right? It has an avenue to allow taxpayers to be able to plan ahead and have a more accurate picture as to how their related party will look like upon implementation. Additionally, in Australia, we also have top 500 and it has top 100, top 500, top 1,000 reviews. It can range from combined assurance, or it can just be an income tax a program whereby the Australian Taxation Office will select 1,000 taxpayers within Australia, obviously with certain threshold, to review their tax as well as the transfer pricing position. So in Australia, it's really beneficial and to have the planning ahead to ensure that when it comes to the review, you have everything ready in terms of having the compliance piece ready for the review. Yeah, so that's more or less Australia.
I think there is another benefit in Australia, if you don't mind me to add on this, which is the fact that a lot of the practice guidance are self-assessment driven. So the taxpayer, because ATO does such a big work in issuing practice statements, they expect the taxpayer to kind of be proactive and then kind of be ready to say, okay, I already told you what I expect out of a particular model or a particular transaction. So what I expect from you is that you kind of model that in advance. So if you are in a high risk, you kind of make the amendments that you need to make before I go after you. So I think that's another compelling reason why for Australia, they have a little bit of a higher expectation, because that's why ATO does such a big work getting so many practice statements or practice guidance out there. Binjin, what about Malaysia?
Well, similar to Australia, is highly recommended. The reason being is that in my past experience dealing with my clients, that a lot of things that they would have not considered until we did the compliance work for them and say that, hey, why not? You could optimize your related party transactions by doing this kind of arrangement and that kind of arrangement. Then it is more of like a sort of a tax planning in a way, because I guess few years back, a lot of our clients are not a lack of skill and knowledge in transfer pricing, and hence they do not know there are things that could be done in a better way. So this is the main reason why I think that is recommended that to look at it when there's a new transactions, particularly from Malaysia. So particularly in one case, in cases I dealt with the local tax authority, they do appreciate the taxpayers that they have doing some plannings ahead before they set up the new related party transactions or with the new pricing policy, they do give some merits on it when it comes to transfer pricing audit. Yep, Adriana, back to you.
Yeah, I think you're right. I like your point, and I think that's equally applicable to Singapore in the region, which is trust. Having good governance has a direct correlation with earning the trust of the tax authority at the beginning of the first negotiations. If you have good governance, I think it starts the discussion with the tax authority on a trust positive note. I think if transfer pricing is coming up as an afterthought and is very obvious from tax authority point of view, I think definitely their trust reduces, and the chances of tax authority trusting that what you're saying is correct reduces. I think the other experience that I have and why the operational side is important is because what I have observed in the region is that the tax authority gets your documentation, and what they really try to corroborate is that what you're saying in the documentation is true, that it has been actually implemented. And that's where they start asking about a lot of operational documents and a lot of documents that are associated more with implementation more than anything else, for them to say, okay, you're saying you're doing this in your TP documentation, but prove to me that that's what is actually happening. So I think that's the one of the reasons why I think is quite important to iron out the operational side of it. So when, for those of you who don't know, but we can elaborate in the following slides, when there is a review, then you're able to prove that what you're saying in the documentation is right. In Singapore, for example, in the last audits that we have faced, all the questions have been around making sure that what we are saying in documentation is sure, is true. It's all about, okay, you said this in the documentation, please prove it. You said this thing in the documentation, please prove it. That has been the rounds of discussions with the tax authority. So I do think that is still beneficial. There is another point before we go to audit ready, which is some countries do require to prepare planning documentation. And one of them that comes into my head is Indonesia, where Indonesia actually has a very clear rule that for them, TP needs to come at the moment of the setting up of the transaction, not at the time, and also at the time that you lodge your tax return. So they expect that the taxpayer is doing the study at the moment that the transaction. My understanding is that if the tax officer is a bit troublesome and they find out that there is not evidence of setting up the planning at the time that the transaction has been entered into, they could try to be more aggressive when it comes to seeking an adjustment. So that is there also in some countries. Anyhow, let's move on to audit ready and some of the points that we want to raise or give insight today. I forgot to say that we have a Q&A box, and if anyone wants us to answer any questions at the end of the webinar, please feel free to drop your questions there. So we have an example here, and maybe in the context of this example, we can talk about some of the common disputes and how can governance and TP help with my audit. So we have company A that sells products to company B, a distribution company, one in country A and the other one in country B. Company A sells industrial parts, that should be company B, sells industrial parts in Malaysia, so meaning company B. So let's talk about what are the common disputes. Honchun, do you want to start giving us some insights on that?
Yeah. I guess when you look at examples like this, I mean, one of the common disputes, obviously, when faced and when the tax authorities actually were to come in. One point which is important, which is correct pricing. That's always obviously where they will actually target the company to inform the taxpayer that they have incorrect pricing. I'm going to adjust you upwards, right? So we'll be looking at not just incorrect pricing, but also looking at the transaction itself, whether for in this example, whether the sale of products makes sense, whether pricing is arm's length or not. And on top of that, what we've faced so far, especially if not in this example, but when we have a Singapore country versus say Australian country, for example, Australia deemed Singapore as a specified country, whereby they would scrutinize a lot more on specified countries, Singapore, Hong Kong, Cayman Islands, for example. So these are the things that you'll be looking at, your transactions, whether they are of substance, whether they are indeed distribution, then looking at their pricing, most likely it will be incorrect. That's where your justification comes in. And then looking at whether the Australian entity is a loss maker or not as a distributor, or looking at Malaysia, whether they are loss maker as a limited distribution or normal distribution. A normal distributor will generally not be loss making consecutively, for example, right? And then certain countries, we're looking at comparable companies that are being selected, right? How you come up with the arm's length margin and to test your transaction, right? They will scrutinize your comparable companies, whether you're using the right comparables, whether they are local comparables, for example. And from there, with your results, then they look at what you deem is arm's length range, right? So now I think every country, Malaysia has changed their range, arm's length range. So you need to be mindful of what arm's length range are there. And then lastly, of course, the TP adjustments that to be made, which are these are the common disputes when authorities will come in, right? They will look in all these factors to target the taxpayers.
How about good governance? How can that help with my audit?
Yeah, I think to me, my experience, the main point, I think that was what Bing Jing has mentioned. The tone of the tax authorities will change if they start seeing discrepancies, conflicts in documents, and but when they start looking at whether the taxpayers has actually have reasonable effort, perform reasonable effort to make sure that transfer pricing is accurate, that's where the tone of the tax stories will change, right? They'll be asking a lot of documents, but when you have good governance, when you have planning, when you have your working papers correct, when you have your, even your bookkeeping journals entries, just give them everything that that justify the good governance. The tax authorities will take less time and will have that trust in what you've done for your transfer pricing to ensure that it actually helps a lot, especially in audit. What's your view then? What are both of your views?
I agree, actually. I agree. I think you have summarized it really well. I think we have stressed today in a lot of ways and give different perspectives on the fact that it does help you in increasing the success rate on an audit. Let's look at because we already went through this, but I think we kind of already gave our country perspective. So maybe let's just look at the latest trends in the context of the following case study. And for this one, maybe we can talk a little bit about the latest trends on methodologies and then come back to the question of, is there such an, what's the issues around dispute resolution and so on. So we have here a case scenario where we have a company in Singapore and head office in Germany, some subsidiaries in Singapore, China, and Malaysia, And there is some intercompany transactions, some license service fee, some management fee, and some intercompany loans. Honchon, I know you don't like the word management fee because it doesn't define the type of activities. Management fee in the form of corporate support, just to be clear. So what's your take on the latest trends, for example, on methodologies?
That, to me, in Australia, for example, it has gone from your normal 5 TP methods to additional assessments. So that's one of the things that I like about Australia is that there are a lot of avenues for taxpayers to not just rely on the 5 TP methods, but actually for us to assist taxpayers to provide a better understanding of their real party transactions. For example, like if you look at this case study in Australia, two of these transactions, I don't need to use the 5 TP methods, your transaction net margin method or the CUP method, for example. Like that corporate service fee, for example, Australia has a avenue which is called the simplified transfer pricing record keeping options. Obviously, there are criteria to be eligible. So it allows a guidance for taxpayers to look at what are the markup that the ATO is looking at. And even in intercompany loans, for example, there are practical compliance guidelines as well as the STPRK options to actually tell you the exact interest rate they're looking at. Right. Obviously, I'm sure it'd be more than a market rate to be on the prudent side, but it provides a guidance for taxpayers that do not want to go through all the benchmarking analysis, that they just want to know a rate that's safe, that without relying on other methods, we use the STPRK method. Then that allows the taxpayers to actually focus on other more complex transactions. For example, licensing services fee here, right? We'll be looking at license fee. Is it license? Is it royalty? So that'll be another focus. But yeah, so in terms of Australia's purposes, it actually helps taxpayers quite a bit.
What about Malaysia, Benjamin?
Well, in the past, we have seen that the tax authority prefers TNMM in concluding a tax audit. But of course, nevertheless, we have tried. In some cases, we managed to use CUP, but not the others. But I guess TNMM is still the most preferred one because you can see we have to do a lot of analysis and including a lot of companies which the comparables may have a very high margins compared to the taxpayer or the taxpayer that being picked up for audit. So this is one of the common trend that in the past, but nevertheless we have seen that the local tax authority has been picking up. They are more open. They understand why we have why CUP should be selected instead of TNM, or even if TNM has to be selected, they are more open in terms of negotiating which comparables are the right comparables in terms of the supply chain, whether the comparables are in the same supply chain as the taxpayers, whether what kind of specific adjustment could be made to enhance the comparability. These are more we have seen a lot of improvement in terms of audit from Malaysia perspective.
I think I commend Australia actually because it's probably the only country in the region where you have so many avenues to apply a transfer price in the context of what the tax authority is already telling you that they believe is the transfer price. Unfortunately, in the region, Australia is the only one who is doing this. New Zealand follows Australia a bit. But other than that, I think there is not a lot of open communication from the tax authorities to say, okay, I believe this is an arm's length price, and as long as you use it, then I'm happy with it. So that makes the compliance side of things, or even the planning side of things, a bit tough in the region. not having a lot of guidance out there in each of the countries of what the tax authorities expect. Where there is, unfortunately, the prices are unrealistic. So I give you an example. India, who has services markups, but their services markup are way above 20%. So they are unrealistic. So that's why that makes it a little bit harder on how to bring a price that is considered a market price. So it becomes a lot of interpretation and judgment. On the methodology side, I think we are still very much focused on the 5 methodologies and the most appropriate method. And I will separate the countries between countries with a lot of head offices versus countries with a lot of subsidiaries. What I have observed is that there is a correlation. For example, Malaysia, as Binjin was saying, or maybe your Vietnam or your Thailand, where the economic background is mainly of subsidiaries type, then they tend to be very focused on the TNMM. Because for them, it's like you have a subsidiary, you have an investment. What I will want to make sure is that I'm getting paid the right amount of tax. Whereas Singapore, Hong Kong, which is head office places, might tend to be not so focused on only TNMM, but open to look at all the methodologies. So that is kind of my take on this. There is another couple of points before we open up for questions, which is avenues to fix potential mistakes and dispute resolutions. So on avenues of fix potential mistakes, I think that's where the region lacks a lot. I'm happy for you guys to jump in anytime to give some perspective on your countries, but I think fixing potential mistakes beyond having to do some retroactive amendments on your tax return or voluntary disclosures, that's where it stopped. So that means that after you close your books, essentially all you are left, if there is a mistake that is captured after you do your tax return, is basically to come forward to tell the tax authority that you made a mistake and kind of ask the tax authority to authorize the amendment of the mistake. But other than that, then you again are at the mercy of the tax authority to make the decision whether they allow the fixing or not. So that's one of the points as to why it's so important to do your planning when you set up the transaction, so you can do any modifications at the right time, which is basically before you close the year in which you implemented the transaction. And the other thing that we lack a lot in the region is dispute resolution. So let's say I say, okay, I made a mistake and I realized 2 years down the track, now I have to amend my tax return, and this is driven by the fact that my counterparty was also asked to change the tax return. How do I deal with that? And that's where the double taxation issue comes into place, because there is not a lot of dispute resolution mechanisms, other than something called mutual agreement procedures, which again requires the tax authority intervention, and you need to get the tax authority buy-in to do it. So that's the challenge that we face in transfer pricing, that once you lodge your tax return, it is really tough to come up with avenues to fix past year problems. Do you guys have any other points here, Hongchuan and Binjin?
Yeah, I think it's very, Australia is very similar, though Australia does have certain options for different dispute resolution options, but nevertheless, it's not perfect. So it's still best to make sure that your TP is correct. And Australia still also has voluntary disclosure as well, but then the avenue is that they reduce penalty by 20%. So yeah.
Yeah, Malaysia, similar to Australia, has I mean, or we have voluntary disclosure, but to some extent, the tax authority will not accept 100% what you submitted. They will still conduct a not audit to some extent to comfort them, their understanding on your business and accepting your proposed voluntary additional tax to be paid. Yep.
Okay, so we can open for questions, even though there is so far no questions in the Q&A box, while people decide whether they want to put questions or not. Please, a couple of reminders for those, actually for those who are new, because there is a lot of new people. We have our YouTube channel. Please like us and subscribe to it. We don't charge for the webinars. All we want is subscribers to our YouTube channel. We also have some webinars upcoming. So very excited to issue our Chinese series, which will start on the 18th of April, followed by 3 other webinars. We also have a class in Singapore called Introduction to Transfer Pricing. And then we will come back with a regional perspective on May with strategies for resolving transfer pricing disputes. Let me just check if there is any questions. If there is no any questions, I'm happy to 1 minute tip. What do you think is one of the key takeaways? Should I start with you, Honchen?
Yeah, I still think that obviously best way is proper governance. I find it's really good that you have proper governance, and we have experienced that for those clients that we have provided transfer pricing planning, we have never had any issues. Even if they have review, for example, they will have top 1,000 review. It always comes with a clean bill. So yeah, I would recommend having proper governance.
What about you, Bingjin? Key takeaway.
I guess it's never too late to take a review that what has been done in the past and do it right for the future, because you can't change what you have done, but at least you can ensure that, make some assurance that moving forward the same transaction will not doing the same mistakes in the future.
Agree. There is one question from someone on Indonesia. So for that person, just so you know, we are going to have a webinar on Indonesia. I think is either in June. So keep an eye on that, because we will be elaborated on PMK 172. All right, so with that, we can close our webinar for today. Please keep an eye on our events, as we will be coming along with a strong 2024 season. And thank you to Bingjin and Honchon for all your sharings for today.
Thank you very much.